All right, we're back for part 2. We kind of just stopped talking in part 1, but we realized it was going to be a big pod. So I don't know if there's going to be 2 episodes or 1 episode or like a 2-parter. Who knows? But we're back.
We are back.
I'm going to talk about Xero.
Yes. Love Xero.
Yes.
Xero stan.
Because I feel like a lot of people say to me, do I need Stripe or do I need Xero?
The thing is, Stripe is not an accounting software. It's a payment service. Same as Nui. It's a payment service. It's a customer management service. It's not an accounting software. So I would say, you can connect Stripe to Xero and you can have people pay invoices via Stripe, or you can have people pay you via Stripe. But I always suggest Xero as the top one because it's the easiest personally for like users to pick up.
Yeah.
It's the most user-friendly in my opinion. You can link your bank feeds to it so that, when you have your business bank account, which by the way, if you don't have a separate business bank account, like do that right now.
Yeah.
Please, for the love of God.
Yeah.
Like as a starting point, business bank account where you have everything coming in and out for your business only. A savings account where you put your tax and your GST savings in and you don't touch it. And then have your personal accounts. Like that's just the basic starting point. If you're not doing that, then do it right now. But little tangent there. But like have those business bank accounts linked into Xero so that when you receive and spend money, it automatically comes through and you can categorize it. And that's going to give you your P&L. It's going to give you your balance sheet. It's going to give you your cash in versus cash out. Like it's going to show you all of those metrics that we talk about with profit, with cash flow, with everything like that. It's going to help you see what your balances are at all times, and it's going to help you see where you're spending the most money. Like
I find that a lot of people, first of all, Xero is pretty cheap, isn't it?
Yeah, it's so pretty much like almost every single client I'm on is on the basic plan, which is $35 a month. It's not that expensive, and half the time they do discounts anyways. For like if you go through your accountants and they subscribe on your behalf. So like if I were to subscribe, I get a discount on anyone that I subscribe for. So it gets cheaper that way. It's like 5% off, 10% off. But half the time they do like 90% off for 6 months or something like that. So you're paying like $3 a month for 6 months.
Seriously, the best platform in the world. I love it.
So good.
So with Xero, there's a couple things that I pick up on a lot. So number one is people don't reconcile their own accounts. Would you recommend for people to reconcile their own accounts or to have someone do it for them?
I would recommend to have someone to do it for you.
Yeah.
As long as that person who's doing it for you talks to you about what you're spending.
How come you would recommend someone over doing it alone?
Because if an accountant is doing it for you, they're going to know what is actually a business expense and what isn't. They're going to know what you can claim and what you can't. Whereas if you're doing it yourself, you're probably just guessing for the most part. And then at the end of the financial year, when you go to your accountant to do your tax return, they're going to have to go through things and it's going to take them longer, which means they're going to charge you more because they're going to have to pour through your accounts and see like what shouldn't actually be there or what's in the wrong spot. And it's not going to give you an accurate measure of what you're spending for your business alone and what your profits are like. Whereas with an accountant, they're trained for this. So they're going to be able to get all of your business deductions in. They're going to be able to make sure that everything that is a business deduction is in there. And then what they can do is if they provide this sort of service is they can then give you a breakdown. Like this is how much you've spent over the course of the month. This is how much you're spending on average total. This is how much is in your highest spend. So like for a lot of my clients, I'll be like, you're spending on average $2,000 a month. This is, good, bad, neutral. And then it will be a case of, your highest expense is training and professional development. You've spent $10,000 on this whole year. Maybe it's time to think about slowing that down and just applying what you've learned. Or, if you've only spent $1,000 on it, then hell, if you've got the time to do it, then I'd rather you invest in that. And I'm pretty sure most people would invest in your own development rather than spending money on more like books and random stuff that you don't really need.
When we say reconciling accounts, what we're talking about is in Xero, you link up bank feeds and all you have to do is like log into your bank and your Stripe and it like connects it for you. It does it all itself. But basically Xero connects all of your platforms into one and it reconciles all your money from everywhere into the one spot.
Yeah.
It's really important you do it right, as you're saying. So with reconciling accounts, it's basically looking at a transaction and going, what is this? And then attaching it to whether it's a contractor or an invoice, whatever it might be.
It's pretty much like a category sort of situation. Like when we say reconciling, we're just matching it to a category.
Yeah. And this is where when my bookkeeper did it for me and then I did it, there was two things I was doing wrong. One, I was categorizing wages on top of the payable. So I was adding an extra $8,000 instead of like canceling it out. And then I would have a Stripe transaction come through and I was classifying it as a sale in Stripe. And then I was classifying it as a sale in my bank. So I was doubling up that transaction.
And then it looks like you've got a whole lot of unpaid invoices, which isn't the case.
And then it looks like you're making more money as well.
Yes.
So basically what I mean, guys, is Stripe sometimes Nui doesn't do it. Nui just comes straight through into the bank, which I love. But
it's so simple.
If you're like, for example, if I ever issue anyone an invoice on Xero, it'll pop up in my Stripe bank feed. And then it will pop up in my bank feed at the same time. And if you categorize them separately, it's going to double it up and say you've made extra money. Yeah. I've done that so many times. But one of the things I find I do my own reconciling because I have control issues. I have to do it. But I have learned over the years from my accountant like how to do it. But when I ask people, like, what's your profit looking like? What's your month looking like? There's like 3 months of unreconciled transactions. And that really triggers me personally. I can't handle that.
Yeah.
How often should an accountant or bookkeeper be doing it?
I do it monthly.
Yeah.
For the whole month. I think that for like, especially for the fitness industry, what you guys are doing, you don't really need to do it more often than that, but you probably shouldn't leave it any longer.
Yeah.
Because a lot of your expenses are coming through monthly. A lot of your income is coming through weekly. So it's not going to be a huge volume where it's just becoming some impossible task where you've got 1,000 things to reconcile and you're just like, I don't have the time for it. But it's also going to give you enough to go off that you can just reconcile the whole month and then open up your report and see exactly what the month looks like. And I find that that's probably the best way to do it for most people. If you have a huge amount of transactions that come through your account, do it weekly. Like just break it down. It's going to take you 5 to 10 minutes a week or like 20 minutes a month as opposed to having to spend a full day on it. If you leave it 6 to 12 months, like it's really just going to take ages.
Triggers me. And this is another thing that triggers me as well. I'm like, how much money are you making? They look at their Nui. And I get it, guys. I understand it. You're making money on Nui, but that is not your actual income.
No.
So let's explain this to people. On Xero, there's a couple areas you should be looking at. So 1, it's your bank feeds. They should be connected. 2, it's your profit and your loss. And then 3 is your balance sheet. Is that right? Are they the 3 areas?
For the most part, yes.
Yep.
I typically look at a cash summary, like for your cash flow over the balance sheet for most sole traders, but for a company, definitely the balance sheet.
Is it cash in, cash out is that what you look at, like the cash balance?
Yes.
Yep.
So with the cash balance, the reason that I look at that is because, as a sole trader, you can take as much money as is in the account really with no real implications. But there, what we can see first of all, like your income minus your expenses. Then we can also see like bigger things that you've purchased. Like if there've been a new desk and stuff, that's an asset. So you can see those. And then after that, what I like to do is I like to take into account all of these things that we're paying for. That gives me a full number for the month. This is how much you can realistically afford to take out of the business to pay yourself. And then that's the number that if you go over that, you're going to be taking more cash out than what is coming into the business, which means that you're either running down your savings, you're not saving enough towards your tax, and you're going to be behind, or you're probably not going to be able to afford all of your business expenses unless you then have to pay the business back, which I think a lot of people fall into the trouble with. Like they'll take money out and then they'll have nothing there and a payment will default and they've got to put money back in. And that's when they get into that hole of like, I just feel like I'm not making any money. I'm constantly paying back. I feel like I have nothing left. That's why. It's because they're just taking money out without thinking about it. Whereas if you have a bit more structure in place and a bit of a plan in place, I mean, it's sort of like the same as like, I mean, with food, like if you plan out your full day on MyFitnessPal before you eat anything, you can see what's going on. You have that structure, you know what you have. If you get to like 6 p.m. and you're like, okay, I need to eat dinner. And then you're like, okay, I have 3 carbs, 6 fats and like 40 grams of protein. What the fuck am I going to eat? You know, like
chicken breast.
Yeah. And then you're like, shit, what do I do?
So that you're talking about the cash balance, is that on the homepage?
There is a little, so Xero's going through a bit of a facelift at the moment. So if you have the new little facelift, then there is a section which says cash in versus cash out. And that's going to tell you everything that has come in versus out of the business accounts, including what you've paid to yourself. And if the cash out is higher than the cash in, then you're going to find yourself in a sticky situation down the line. Your cash in should be higher than your cash out, or at the very, very least equal.
And that's physical cash?
Yes. That's absolutely everything going in and out of your bank accounts.
Right. I've never looked at that in my life.
It's a new little facelift on the dashboard.
I don't like the new dashboard. It's sent me.
The thing that I don't like about it is that you set it to a certain view, but depending on the size of your screen, it screws with the view. And I'm like, just present it the same way.
Yeah.
But it messes it up.
I miss the old one.
Okay, it does show you more stuff.
Cash in and cash out is literally just money into your business that month, money out of your business that month. Yep. Simple. What's the difference between that and a P&L? And what is a P&L?
Yes. So a P&L is your profit and loss. So that's going to show you all of your business income minus all of your business expenses. That's your profit or your loss if it's in a negative. If it's a loss, that means that you are spending too much to support your earnings. So you either need to up that income, lower those expenses. Like those are going to be the two basics, really.
Is the P&L an itemized version of the cash in and cash out?
Yes, but cash in, cash out shows you a little bit more.
Okay.
Because this is only showing your business itself. Whereas the cash in, cash out, if you pay, like transfer money from your personal bank account, from any other bank account into the business account, even if it's not income or anything like that, it will show how much has gone in. Same with the opposite direction going out. It's also going to show like your GST, which doesn't come up on a P&L because it's separate. It's completely separate and it's reported completely differently. So your P&L is basically what's going to be on your tax return, whereas the cash in, cash out shows you absolutely every single piece of physical money that has gone through your bank account. And it categorizes all of that.
Wow. And then with the P&L, I love my P&L. I'm obsessed with my P&L. This is like itemized expenses for the month, like where it's all categorized. This is your reconciliation basically.
Yeah.
But when it comes to a P&L, one of the main conversations I have with clients is, why is my NUI or why is my bank showing a different figure to what is on the P&L, and why does the P&L differ to the cash in and cash out? It's like, what's the answer to that question?
So first thing is going to be like, if you're going through like Stripe has fees connected to it. So Stripe is going to show you, this is how much income you have minus this many fees. The net amount of that is going to be what comes into your bank account. So if you code that entire thing to income, then it's going to show you the income minus the fees in your income. So that's why it's going to be a little bit different. Same with NUI. If you pass, like if you have the fees there, it's going to give you the report of this is how much they have paid you versus this is how much is actually income versus an expense. So when we look at trying to make those the same, what we're going to actually need to look at is your NUI or Stripe income minus your NUI or Stripe fees. And that should end up balancing. It also might look different depending on how your default report is set up, because NUI will base it on like the payout structure and everything like that. Xero automatically goes towards a different structure. and you've got to change the way that it looks from like there's like 3 little dots and you've got to change the way that it looks to cash to show you those different time periods, because sometimes it is just a timing thing. And then cash in will show you everything plus GST plus all of that. Whereas if you have GST, that's going to be taken out of the P&L. So all of the different like little bits and bobs are not going to come together in the P&L. They're going to be separated out. Whereas in the cash in, cash out, it's all bunched together.
Would you look at the P&L as the finality of how much money your business is making, or the cash?
I would look at the P&L itself, but when I do that, I keep in mind the fact that we're going to have extra bills that we need to pay.
Right.
So it really depends on what the purpose is. If I'm looking at like how much are you making, I'm looking at the P&L and I'm looking at the net profit. Because realistically, at the end of the day, if it's not matching Nui because of the fees and everything like that, I mean, when it gets to the end of the P&L, everything's going to be the same anyways. So it's kind of like neither here nor there. But when we have a look at how much money we're actually making, I'm looking at the total profit. Whereas when I'm looking at how much can you afford to actually take out of the business and use for your own personal life, for rent, for savings, for going on a holiday, buying coffee, anything like that, I want to look at the cash because that's going to tell you how much is left after absolutely everything else that we're doing. And I'm taking into account what we're putting aside for savings as well. Yeah. Because that's not really yours to use. Same with like your GST savings. None of that money is yours to use because it needs to go somewhere else.
Super interesting, hey?
Yeah.
Sorry, my phone is vibrating. I'm going to turn it off or let me alone. I find a lot of like empowerment with understanding my P&L, and I really, really enjoy going over my P&L because it tells me so much about my business. So you've probably learned the way that I work with a P&L. So when it comes to P&Ls, I like to look at the last 3 months or even 12 months. Makes me so happy, like side by side where I can see all the months, and like that's how I visualize it, like the peaks and troughs of the months. Like I really enjoy that. But when like going through a P&L, I feel like a lot of people don't understand what it means. Yeah. So what I feel like we should probably do is like a bit of a breakdown of like what we're looking at to make strategies to make more money within the business in a P&L. So like, I mean, I could even get out my P&L and break down like the categories and things like that. But basically like at the very, very top, you've got your revenue. Yes. So that's what is revenue? People like we'll break it down to the simplicity of it. So revenue is not profit. It's just total.
Revenue is income.
Total money in.
Same thing. It's just what's coming in. Yeah. Profit is in minus out. Yeah. Revenue is just in.
Yeah. And then P&Ls look different, but typically there's like a second category under that. What is gross profit?
So gross profit is, I'll use the activewear company example again with the materials. So if you're making your sales, so your revenue, sales, revenue, income, it's all the same thing. When we have a look at your total revenue up there, that's going to be every piece of clothing that you sold and how much money you got from all of that. Then the bit underneath that is what you absolutely have to spend in order to sell that clothing. So that's going to be your materials. So if you sell, say, $10,000 worth of clothing and that exact $10,000 worth of stock cost you $4,000, then your gross profit is going to be $6,000. So the $10,000 minus the $4,000. And the reason for that is because no matter what else goes on in your business, no matter what else happens, you physically cannot make that money without spending the money to get the actual materials to sell the clothing. So that gross profit is telling you this is basically how much money I'm actually making from my clothing because everything else is for your business. This is just for the product.
When you're looking at profit margins, are you looking at net or gross?
Net.
And you should always be looking at net as like a healthy profit margin.
I would for this industry. Yeah. Just because most of your expenses are going to be for the business anyways. And I would even extend that to pretty much all service-based businesses. So when I look at profit margins, I'm looking at, this does not include your tax expense, by the way. I don't look at that including in your profit margin. I look at what your profit is, your net profit in relation to your income. So it's pretty much just a simple calculation. You take your profit, your net profit, divide that by your income. Whatever that is, it's going to be a 0 point something, times it by 100. That's a percentage.
And then net profit is after everything else you spend in the business. What's a healthy profit margin you like to see in service-based industries?
I personally like to see 70% or more. And that's mostly because I don't consider tax expense inside that. So tax expense I consider afterwards, because that's something that we can manipulate to a certain extent with our deductions. So if we're looking at our actual overall profit margin and you're sitting at 70%, then when we take away that tax and what we're saving for tax, we're probably going to be left with around, somewhere in the realm of half, maybe 45, 50%. And that's going to be a good enough position for us realistically, where we can take some money out of that and use it and not have to live on bread and 2-minute noodles. So it's going to be dependent on how much you're earning, but pretty much the ways to manipulate it, the ways to get it higher is going to be earn more, spend less. So if you're in a position where you're not earning all that much, or if you're in a position where you look at all of your expenses, and this is where the P&L comes in handy, because you can look at exactly what you're actually spending through everything. If you look at all of those things and you're like, I can't really do what I do without these items, like there's nothing here that I'm willing to let go of, then you need to make more money. And that's basically all you can really do. You can do that by upping your prices or upping your client base. Like when we look at strategies, that's what we're really looking at. Do we need to make more money or do we need to spend less? If there's no place where we're willing to cut down, then we're going to need to make more. If there are places where we're willing to cut down, then we can manipulate it that way anyways. And that's going to be probably, like, that's my favorite way to do it, because I feel like it's a lot easier to save money in small areas, like getting rid of some subscriptions that you're not really using all that much, potentially taking a break from a course, or even like looking at what services you pay for and seeing if there's like a lower option available if you're not fully using it. So like if you're paying for, different resources and different like marketing and all that stuff, if you're paying for somebody to run a social media strategy, but you're not executing that strategy, then you know what? I would say take a break from it, get your head right, get out of the hole, get into a better headspace so that you can start to execute it and then implement it later. It doesn't mean you have to get rid of it forever. It just means for now, it's probably not worth it for you. Because if you're not doing it anyways, it's not giving you the benefit that you need.
When it comes to employees and when coaches employ, do you find that profit margin takes a hit because of the new integration of like wages and things like that?
It does in a way. So your profit margin is going to come down because you're going to have more expenses because you're going to be paying somebody. If you're paying a contractor who works as a coach, then really what I like to look at is what benefit are they giving you? Or same with like a VA or something like that. If you're contracting this out, or even if you have them as an employee, I'd be looking at what do they do for you? And then with that, what do they do for you? Could you do it yourself? Yes or no? If you could do it yourself, how much is it costing you to do it yourself versus the actual physical cost of paying this person? Like if you're paying them $300 a week, but you are able to open up your books to 20 more people, that $300 a week is going to be offset by the 20 more people when you cap it out anyways. And especially if it's something like if what they're doing is something that you were just not doing yourself, pay somebody else to do it, get it sorted, and open up your time so that all of that time that you spent procrastinating or stressing about this one thing that you haven't been doing, or that is just causing you so much stress and overwhelm to do, you can then open that up to go back to coaching more people. And then you're improving where you're at. You can even you can talk about pricing, and if you're paying them a percentage to coach some people, so that you have more time to work on business scaling, that works as well, because you're able to open up your capacity to more people whilst not doing as much work. The idea is to do like the minimum effective dose of work to spend, really.
Yeah, for sure. It's really hard, like, to make money like that.
It is.
I find that in agency land as well, incredibly hard, because agency is applied work. It's one of the most difficult things. Quickly before we get back into Xero, when it comes to hiring a coach, what kind of structures would you recommend and that you find work? There's a lot of talk about sham contracting in the industry and employment being a bad option, things like that. Obviously, there's a lot of legalities around it that we can't give advice on. But what structure do you see working the best?
I prefer contractors over employees. Mostly that's because if you have an employee, you need work cover insurance. So that's an extra cost. You need to pay that super, which is 12% on top of the wages. You then also need to comply with the minimum wage requirements, which is a whole other lot of legalities that, you know, we can't advise on, but you do have a minimum wage. You have to give them a certain number of hours, whether or not there's work. And you also have to pay their PAYG withholding, and that adds on to your BAS as well. So there's a lot of extra additional like on costs that you have for an employee that you just don't have for a contractor, where you pay them a set fee, whether it's a percentage or an hourly rate. I find that, you know, either one works. It's much of a muchness. It's going to be what the contractor is willing to charge. But you don't have to pay super. You don't have to pay tax. You don't have to pay any of these things. You just get that deductible expense. They do the work for you. And the reason that's going to work probably a bit better, because you can get them to work the amount of hours that you need them to, or do the things that you need them to do, and then no more, no less. When it comes to like onboarding and leaving and stuff like that, it's not going to be as stressful on you from a time or money perspective. Like, it's just going to take up a lot less resources overall.
Yeah, absolutely. There's a really big debate about it. And I've had employees for years, and holy crap, it's a responsibility. And I feel like a lot of people don't recognize that kind of responsibility. And like, I will have to pay contractors to fix employee things. Like, it's a really big thing. But one of the main questions I get when it comes to like employing and contracting, there's obviously a time and place in business where you have to employ, because you can only contract for so long until it becomes, in the eyes of the law, they're an employee. And my accountant always told me to sit between that 3 and 4 ratio. Like, they have to bring in 3 to 4 times their income for it to be a good role, unless they're taking responsibilities from behind the scenes so you can generate that income yourself, which is something I've lived by. But when it comes to coaches and things like that, the knowledge around how much you should pay per client to all these different areas are really unknown. And like, for example, like something that I say to my clients is, you need to be taking home 70% of that customer payment. So yes, you might be paying them $20 a head, but you have to be taking home $80 for that client. And they're like, but $20 isn't that much. I'm like, but realistically, like, if you give them 50%, you're taking home nothing. Like pennies. So is there kind of like a ratio, I guess, that you would recommend to people if they're going to contract per person?
I think it's going to be dependent on your business and what you're actually doing with that coach. Like, if that coach is working under you and you're not just offloading clients to them, but you're providing the leads, because this is something else to consider. If people are coming to work with your specific business, not with that coach, you've drawn them in through your reputation, your name. So you're providing the lead. If you're mentoring them and supporting them through their education, if you are co-coaching with them, so like if they're bouncing things off you, or if they're just self-sufficient, they write, you know, the training programs, the nutrition programs, and they just do it themselves, it's going to be dependent on how much you are involved. I think if you don't really have that much involvement, then I'd be saying, you know, minimum 50%. If you're doing all of that extra support, mentorship, you're generating the leads, you're doing all of this stuff actively, then realistically these clients are coming to work with your team. They're not coming to work with this coach, which sounds a little bit harsh, but it's just the truth.
It's true, yeah.
So if they're coming to work with your name and your team that you've worked hard to build, then absolutely you have the right to take more than that. I don't think that there's one set answer, but I think, you know, anywhere within the realm of, you know, 50% minimum to, I mean, even as much as 80%, I'd say is going to be a good band to sit in, or even just giving them an hourly rate.
Yeah.
And like for an hourly rate, honestly, contractors, there's not really too many laws on it. So I would just say like, you could even just ChatGPT that thing and just be like, what's the average?
But even with a contractor, you have to pay them right. Like, I think the for example, one of the structures, I mean, I use a lot of different structures across the board, but one of my customers, they pay $50 including GST to the contractor, but they're expected to service 2 to 3 clients in that hour. So like having that kind of KPI for them to stick to, because then on the back end, we know what the ratio is. We're sitting at a ratio of, we're making 3 times the amount. But that I've started really leaning into more of an hourly base as well, because with contractors, if you pay per head, there's that argument of I've serviced the customer and that's all I need to do. Whereas if there are ad hoc tasks, it's like we're paying you an hourly rate. You're expected to service these customers and then potentially a couple of duties in that as well. And it can just help build sustainability. Yeah,
I think that regardless of the way you do it, you just need to be really clear on their responsibilities and actually enforce it and uphold it. Because if you're not enforcing it and making sure that they're sticking to it and reviewing that performance, then there's naturally going to be a point where it's probably going to drop off.
Yeah. And one of the biggest mistakes I see is people going, oh my God, this contractor is amazing. I want to keep them. I'm going to give them more money per person. I'm like, do not do that. Do not do that. And again, it's case by case for sure. But for example, I just had a client that did that. An ex-client, we were paying them a specific amount. They really loved him. They decided to pay him $25 extra. So he was getting like $55 per person he was signing. And I was like, you've really shot yourself in the foot, because one, you're taking home less than 50% now. You're paying all the taxes. You're paying for the marketing, like all the leads are coming through you. But number two, the next option for him probably would have been to offer him employment, but he's never going to opt for it now because of how much money he can actually make. And this is going to cap you. Like, it's when you're a contractor, yes, that's a benefit. You're getting paid per head. You can make heaps of money, but no matter how much you make as the business supplying it, the more customers you have, the more money you're paying out. So there is like a really delicate balance of when it comes into play. And it's really important to have someone in a HR world to help you with this.
Yeah. And, you know, something that I kind of just thought of when you were speaking is another thing to consider is if that contractor performs in a way, even if it's just 1 or 2 instances that's unfavorable, and they get like, imagine they do something wrong, they get slammed online. The person's not getting slammed online. Your name is.
Yeah.
And it's ruining your reputation. So the risk is entirely on you, even if that contractor is the one that messed up and you had no idea it was happening. Like if they're not delivering the quality that you want to deliver, then it's going to affect you and your business. It's not going to affect them all that much because their name's not tied to it. They can just go out on their own with no repercussions.
Yeah. Oh God, that's happened to me multiple times.
I bet.
Yeah. And it happens with staff across the board. It's like sometimes you are lucky enough where business owners get it, but it's your reputation on the line at the end of the day. I can't really give advice on it though, because we're an employee model. Like there is no way forward moves would be forward moves if we were a contractor model. And it's funny that someone actually said that to me. One of our ex-staff members, Shayla, you probably know her. She's in the industry. She still works with us. She goes, I was thinking about what makes forward moves had the strength that it is. Like, you know, everyone knows the team. Everyone knows the team's been around for years and things like that. And she's like, I really believe it's because you employed the girls so early and you gave them that sustainability. And she was like, in a contractor model, yes, the business profits more, but the quality of work with the customer can be less because everyone's off doing their own things.
Exactly.
And it's like, it's really dependent on business to business. And when people say that to me, I was like, I actually can't give you advice because I'm an agency. And as an agency, I believe you have to have employees. and agencies do not run one. They're very expensive. Please don't run one. But it's funny how different it is from person to person. But I see a lot of sham contracting in the industry. It's just such a rocky road, guys. Such a rocky road.
Yeah. And I also think like there's almost this attitude where naturally, if you're employed, that's something that you view as your job. You go there, you do your work, you come home, that's it. I feel like when you contract, there's also that idea of, in the contractor's mind, in the back of their mind is always going to be, I could do this myself.
Yeah.
Because they're basically doing it themselves without the back end.
And the thing with contractors, which a lot of people don't know, is if you have a clause in their contract to say that you can only work with your company, so you have a coach contracting to you and they can only exclusively work with you, you are sham contracting. That is an employment agreement, because as a contractor, they're giving you a business. So it's business to business, and they should be able to do whatever they want outside of that as well. And I think that's where a lot of the advice goes a bit haywire in this industry. And it's like, you got to be so careful with this stuff.
Yes. And there's also like the whole, I don't necessarily think it's a bad thing, but I do think it creates a lot of resentment in terms of ending the agreement when you can't take any of the clients that you've worked with. Because it's generated by the business. I understand why it's in there. I do get it. But I think it does kind of burn the bridge, because people sit there and they go, I've worked with these clients for 2 years. They're coached under me. I've done all of the work to bring them where they're at, and I have absolutely nothing to show for it. And I have to start again. And I suppose that is a way to sort of encourage retention, but it doesn't encourage happy retention. And then the quality is going to go down. And then once again, it's your name that's on the line.
It's definitely a risk, because as you would know, like being in a coaching capacity, and we were talking about this before, like coaching, it is one of them industries where like it is very individualized. And for example, if my coach left my coach's business, I would go with them because I don't want to find a new coach. Whereas I've had a lot of instances where people are like, you can't take clients with you, and then they lose every single client. So it's not only turned out bad for the business, but it's turned out bad for the coach and the client that's included. And like, I'm a really strong believer that if you're a coach and you have a coach that's leaving your business, you need to not have a general rule of thumb. You need to take it case by case with your customer list. So you go through the list and go, these guys have been with this coach for 2+ years. You can take them. However, these clients have only been with us for a total of like 8 weeks. I want to keep them because they did come to our business for me. And like, you need to evaluate the relationship with each individual customer rather than saying, no, they're mine. Like, it needs to be very case by case basis. And I think that's a really healthy way to do it, because one, first of all, you're allowing that coach to keep a relationship with their customer. But second of all, they can see that you've actually gone, okay, realistically, this is fair. And it creates a really healthy relationship. And I think a lot of people, they're just so in their own, like, no, this is my business. It's like people get attached to their coach.
They do. And I think you've got to think about the client as well at the end of the day. If you keep that client and you transfer them to you, what is the likelihood of you retaining them?
Pretty low, because they're going to go after the coach.
Exactly. Because they're going to be like, it's not the same person. Like, this isn't who I was working with. I don't, like, it could be even as simple as just like a personality clash. You might just genuinely not vibe well with them. So if the likelihood of you retaining that client is low anyways, why would you prevent them from going with the coach that they've worked with for 2 years? It doesn't make sense to me.
Yeah, I agree. But again, it is so hard because it's so case by case. But there's also new laws that people don't know about, where if you actually earn $180,000 as an employee, there cannot be a non-solicitation clause in your contract. Oh, sorry, there can't be a non-compete, not non-solicitation.
I didn't know about that.
Yeah. So basically, previous to this year, you could have a non-compete. So a great example is Ray, my graphic designer. When she first started with me, I was like, don't care what you do outside of work, you just can't work with fitness coaches. Now I don't care what you do outside of work, but you have to report if a fitness coach comes to you, because they're protecting the employee. So it's completely changed now. And I think a lot of people don't know that either.
Yeah, I think laws around employment and contracting are very tricky. And I mean, I'm sure you would agree, talk to a lawyer. Like, that's going to be the best recommendation. Talk to a lawyer, pay the fee to just get their advice.
It'll save it'll save you so much money. Trust me, I've paid the legal fees when it comes to employment.
Yes, like if you've tried to read through like a minimum, like an award.
It's awful. I'm lucky
sucks.
I was in like a bit of HR before I started, but I have been down the employment route. I have had legal issues. I have had fair work issues. I've had everything you can name under the sun. It cost me 25 grand once to get rid of an employee. And like, that is because I tried to take the cheap route out. So I always recommend, like, even my lawyers, I always talk about them. They're called Progressive Legal. They have a subscription. It's like $500 a month. You get your legal contracts and you also get advice for the initial 12 months.
Beautiful.
It's a lot of money, but realistically, when you're employing, you're making money that can cover that, right? But because I did that, I now have a very good infrastructure later. So yeah, it's just it's
so worthwhile educating yourself at the start, or like it's so worthwhile consulting with somebody that is specializing in a specific area so that you can actually get the knowledge that you need to apply it later on. Like, I feel like it's so undervalued, and really, like, people are going to probably hate me for saying this, but you don't come into this industry expecting not to run a business. And if you do, you have no place running a business.
Yeah.
If you're not willing to either educate yourself or hire somebody who is educated to do it, you just don't have any business with an ABN.
It's the balance between being a coach and a business owner. And it's like, if you want to have a successful business, you have to act like that.
Yes.
And having a successful business costs a lot of money, guys.
Yeah.
Like a lot of money. But yeah, we got way off track with that contracting thing. Back to the P&L though. Like, one of my favorite activities to do myself is go through, like, click on my P&L. So like, for example, in your P&L, you have categories and I'll click on my advertising and I'm going, what did I spend this year? And then I go through every single transaction for that year and I'm like, okay, like maybe I shouldn't have spent my money here. And then I remove that from the strategy moving forward. And it's just like a really simple way. And I kind of really compare the P&L to being a fitness coach, right? Like, you have their life, you have their plan, what's going on in that plan and how do you adapt it?
Yes.
And that's literally all it is. And I feel that the fear is holding coaches back from doing that. But when I do it with people, like I did it with my client the other day, and now she's like, I love this activity. This is so much fun.
Yeah.
And I'm like, yeah, because you actually can physically see what you're spending your money on and then go, oh, I'm silly. I shouldn't have done that. And then you remove it. And I always love it when tax time comes around. We always get so many cancellations because like, I don't need this anymore. I'm like, no, you moved through your P&L. But I feel like a lot of people are scared of it because they're scared of money, but it's actually a really great activity.
It is. And you know what? Like, I feel like people look at finances being so emotionally charged. They feel so upset and so scared. And I think if you're scared to look at your expenses, it's because you know you're bleeding money. And so what is the point in knowing that and avoiding looking at it? It doesn't make sense to me. It's just a number. It's just data. It's like the fucking scale weight.
Yeah.
Like, it's just a number. It doesn't have any place ruining your mood for the day. It doesn't have any place in your feelings. All you're doing is looking at what's happened so far. Okay, am I happy with that or not? No, change it. Do something about it.
One of the best pieces of advice I've ever got with finances was open your bank app every single day and look at your balance.
Yeah.
Because they were like, there's a few things you're going to learn. 1, you'll know when it moves. 2, it's not going to move. And 3, you're not going to die. And they were like, you're going to see the pattern before it dips.
Yes.
And that was when I first started my business, I was like, that is the best thing ever, because I logged into my bank every day. I had so much anxiety. I saw the balance. I was like, cool, move on with my day.
There's so much power in educating yourself, and it doesn't take that much to do it, to be honest.
Yeah. And I got a question the other day. It's like, how did you gain so much success? And I really based it down to the financial literacy. Like, I learned how to read my business. I learned how we're going to have a good month and a bad month. Like,
yes.
And people just ignore it so much.
Yeah. Like, yes, the tax system is complex.
Yeah.
But the basics of finance is not. It's just that you think it is, so you avoid learning anything about it. Or you don't know where to look, so you avoid learning anything about it. But I'm of the opinion that if you run a business, it's your responsibility to learn.
Or you've got the wrong set of priorities. Like, yes, it costs money to have a service, for example, like you, which Jordan is a very affordable service, guys. So definitely
I try my best.
It costs money to have a service like you. And for example, there's a lot of people that make a lot of money really, really quickly, but then they get stuck at making that money quickly and they dip. Whereas if you do it the right way and you actually invest in having the right team and you take a bit of a break for 3 years and you accept that you're not going to make good money for like the first 3 years, what's going to happen after that 3 years is you're going to have the skill set, you're going to have the team, and you're going to have the ability to finally have the lifestyle that you want. And I think a lot of people don't see it like that because of the way that business is marketed online at the moment. Yeah,
because everyone's growing so quickly.
Yeah.
And it's like, okay, but what you're seeing here is how many clients they've got. If you're signing on 10, 15 clients a week, that's amazing. You're seeing all of that coming up on New Eat. That's incredible. How many clients of those are replacements because people are dropping off after 12 weeks? How much money are you spending? What is your profit like? Like, you don't actually know what these people's lives are like. They just bought a new Porsche. Okay. Did they do it on a loan though? Are they in debt now? You don't know.
This is why I've never spoken about our revenue ever. And revenue
doesn't matter.
No, I've always had a lot of question about it. And like, I will flippantly say it, like, yes, we hit the 7-figure mark. That literally means fuck all, guys. Like, if I don't have money in the bank, what is the point of me making that revenue?
Exactly.
And like, there was a time there where FM was making a lot of money. Like, we were taking home like, $600,000 a year a couple of years ago, right? But we were spending 605 because we weren't strategizing it correctly.
Yes.
So to do that flip of like, now it's a very different story where like, we're doing a lot better in the sense of net profit, that you've got to look so far beyond that online. Like, people are making millions and millions. It's like, they're probably spending millions and millions to make millions. Like,
exactly.
And I always say that to people. They're like, I want to make $30,000 a month. I'm like, why? Like, because I want to make that money. It's like, okay, but let me put this into perspective for you. You make 30 grand, you spend 28. What have you got left? 2.
Exactly.
You're making 20, you're taking home 10 right now. What's a better position to be in? And I think a lot of people just can't let go of the ego.
No. And you know what? I'll share a really common trend that I see with a lot of coaches that I've worked with that grow really quickly. Their spending grows with it. They...
Sorry. How rude.
I know, right? So they would have been at one point, like, say, earning 5 grand a month, spending 2 grand a month. They've doubled that, but they've doubled their spending. They're taking home the exact same amount for twice the work. Is it really worth it? Like, I'd rather work less. I'm going to be so for real. Like, if I'm going to take home the exact same dollar value at the end of the day, let me work 10 hours less.
And there's a time and a place where that is going to be your life, but it's a very slippery slope.
Yeah.
And that's why I've always made a very big effort to not speak about, first of all, who cares how much money I make? It doesn't give anyone results. But second, you have no idea what's behind that revenue. Like, you have no idea what's going on behind the scenes. And like, that's why a lot of people don't talk about profit online, because it's a very touchy subject.
Yeah. It's very different.
Yeah.
Completely different story. And it's looks a lot prettier to say I'm making 10K a month than it does to say making 5K a month.
Yeah.
Which is what you're actually taking home.
Yeah.
And that's the thing that's going to be the make or break in your life. Like, that's going to be the thing that you're going to notice.
It's like, stop chasing ego-driven money and start chasing proper money. Proper money is going to take you 3 times the length, the time to make it.
Yeah.
But it's going to be worth it.
Delay gratification, guys.
It's so hard. So hard. But
you all, sucks.
This is the thing. You all do it with fitness and health.
Yes.
So do it with your business.
It's the same principles.
Yeah.
And some of you even notice it. Like, I got off a consult call the other day and like, I said the scale weight thing and she's like, you know what? That's so true. And I never would have thought about it like that. There's one girl that's like, you know how people feel so like overwhelmed and scared about like getting a meal plan. That's how I feel about doing a tax return. And I'm like, so you're noticing it's the same thing. What would you tell your client? What would you tell that person? Employ the same strategy for yourself. It's all in your mindset. It's just data and education, and that's empowering. It shouldn't be scary to know what is going on. That should be empowering to you. Even if what is going on isn't where you want to be, guess what? Now you know that you're not where you want to be, so you can fucking get up and get there.
And you know what the funniest thing is that I found really counterintuitive is people don't want to spend money on an accountant, but the accountant is going to be the first person to call you to say, you have a week to turn this shit around, or you have a month to turn this around.
Yes.
Like the amount of times my accountant has called me and said, we might be in a bit of a position unless you turn this around. And it's like, cool, I will put off all my contractors for the week to turn this around kind of thing. Like it's your accountant's not just there to manage your money. They're there to look at your forecast as well to be like, yes, this is a great idea, or no, you're in a really bad position. And like, even I have my days, like the other day, after I paid my tax bill, had a bit of a moment. I looked at my bank account and I was like, it hasn't been this low in a while because I paid this massive tax bill. And I emailed my accountant and was like, am I okay? She's like, yeah, you'll be fine. She's like, I'm not stressed. So you don't need to be. And I'm like, cool, we're good. And like having that backbone of someone understanding that is the benefit that you get out of it as well. Like if my accountant's not stressed, why the hell am I stressing?
Exactly.
I don't need to stress.
That's the point. We do the stress for you. We'll let you know if you need to be stressed. And like, I mean, it's not the be all and end all. Like we can work with you on this stuff. Like I was talking to a client the other day. I sent her insight and I was like, these are your highest spends, the things that you need to do to like basically help your profits and get into a position that you want to be in is going to be spend less money in this area and spend less money in this area, like drop this subscription. And she came back to me and she was like, look, I love this subscription. I want to keep it. It's really good for me mentally to have it. Where else can I save money? I was like, okay, great. If we're keeping that, we're keeping that. Because otherwise, guess what's going to happen? She's not going to do it. She's going to keep paying it. And I'm going to keep giving her the same advice every month saying, why are you paying for two of these things? Drop one. Now she's come back to me after the first one gone, no, I'm not willing to drop that. Like, where else can we save money? I'm like, great.
Yeah.
Let's focus on these things instead. This is good. Like open communication is good.
Yeah. And I feel like that's what's so good about your business model because you don't get that from regular accountants. Like, I talk about my accountant a lot, but I pay a lot of money for her to be on my case that much. Like I pay like $1,500 a month for her to be like that kind of coach in pocket accountant, right?
Yeah.
But you don't get that from regular. A lot of accountants just leave you high and dry for the full year.
Yeah.
Whereas like your service is like monthly integrated advice. This is what you get. It's kind of like the coaching aspect of it as well.
Yeah, which is where, you know, like that's what I really wanted to do with Fitbooks. Like I wanted to give that strategies because like the main problem that I was seeing with people is they're like, okay, great. I know that I'm spending too much money, but I don't know what to do about it. It's like, okay, so you need that extra step there being like, this is the way that we can turn this around. This is the way that we can get you to where you want to be. And it can be integrated with your goals and you don't have to like, it's not technically going to be financial advice. Like you should be investing in this. You should be investing in that because that's not something that you can do as an accountant. So if your accountant is giving you strict financial advice and not saying this is not financial advice, this is just facts, that's a red flag too, unless they also have a financial planning aspect. But like you can strategize and you can make things work and it doesn't have to be just this is what your numbers are. You're on your own to run your business. Yeah. If you need the extra help, like, I mean, why not get it? Yeah. To give you the peace of mind on what's in your bank account, to give you the peace of mind that your business is going well, like, what is that really fucking worth? Like, so much.
I agree. And I think like to tie off the podcast, breaking up with accountants. This is a big one because a lot of people will be unhappy with their accountant and say they reach out to you. There's obviously an avoidance piece of like, I don't want to have to do that. Rah, rah, rah. So can you explain what the process is? Because it's actually a really good process.
Oh, it's super easy. So if you're changing accountants, you don't actually have to tell them anything. we can do it for you. You give us, like on our intake form, there's literally a section that says, do you work with an accountant right now?
Mm-hmm.
What are their contact details? You give me their contact details. I basically send them an email saying, is there anything that I need to know ethically to not take on this client? Chances are it's going to be a no. Like it's just a formality. They say no, they send over your tax return, done.
Yep. You don't even have to say anything to them.
You don't have to say anything. No. If you're friends with your accountant, then you can. You don't need to.
Yeah. That's great. I feel like a lot of people would hear that and be like, oh, okay, I can leave them.
Yeah. I'm like, you don't actually need to say a thing. Like, I mean, it's not personal.
Yeah, it's all done for you behind the scenes.
Yeah, exactly.
And that's the thing. It's not personable. It's not personal, but you have every right to do whatever you want to do for your business. Like you do not owe loyalties to anyone. Like I understand being loyal and people have helped you with your business, but it's your business, it's your well-being. And if you're not getting a good service, leave.
Exactly.
Yeah.
And like, I mean, I'm sure you would agree, like losing a client sucks. And I'm sure all of these listeners will agree. Like losing a client sucks. Does it hurt your feelings? Maybe for a second, but okay, that's what they want.
Yeah.
They're not getting the results that they want with you. Okay, that's great. Give me feedback. What is there about this service that you didn't like? If they say, you know, it was too expensive or I'm shutting down business or, you know, like, I don't know, maybe I just want to do this myself. Okay, great. No worries.
Have a positive ending because they'll come back to you at some point.
Yes. I have a couple of clients who like they've dropped off because they're not in a position where they want to be focusing full-time on coaching and I still talk to them. They're fine. Like we still stay in contact and everything. And a few of them have even been like, you know what? As soon as I'm back into the green, I'm coming back. I'm like, okay, that's great. It's not an expectation. If you don't, that's fine. It's not anything against me. It's not anything against you. I want you to succeed in business. And if you can't do that with me, that's okay.
Yeah, I agree. I think a lot of people get really hurt by it. It's like, this is business.
Especially with like an advice perspective of it. Like, I mean, realistically, if someone's going to cancel, then either they're probably not going to be taking your advice on or they're not understanding the way that you're doing it, in which case neither of those are going to be a good fit for you. There's no point in them staying on unhappy, building resentment towards you because they're paying you for something that they don't deem worth it.
Yeah.
And you building resentment towards them because they start to drop off on like what you're telling them to do and you notice them start to not listen. And then you're going to be like, what is the issue? Like it's okay to lose people.
Yeah. Yeah. Absolutely. And it's okay to not have loyalty to that person as well if they're not serving you anymore.
Yeah, exactly. Businesses change and needs change along with it. Like, I mean, you're restructuring your office right now. I've restructured mine recently because of these exact things. Like businesses change. Your business has changed. Mine has changed. Our customers' businesses are changing.
Yeah.
If you're not changing with it, then you're not going to succeed.
Yeah, you have to be really accepting of that. Like that is a huge thing. Like you have to be accepting that you are someone's chapter sometimes.
As long as you leave them, like as long as they leave you better than where they came off, that's a win in my book. Like if you leave my service and you find yourself now in a better position, you can manage it yourself. Fantastic. I feel like I've done my job.
Yeah.
I'm happy with that.
Yeah. Feels.
Yeah.
It's hard because everyone's emotionally driven in this industry because it is one-to-one coaching.
Yes. And it is a lot of personality that's involved and a lot of big personalities, which is not a bad thing.
Yeah. I've had clients that I clash personality-wise with and they've straight out told me, I'm like, yeah, cool. Like I don't have an issue with this because I know that it's going to be a clash.
Exactly.
Yeah. Exactly. Well, we've been talking for so long. Oh my God. But to tie up the podcast, where can everyone find you? And give your Instagram, what's going on in your world and how to work with you.
Yes. So you can always find me on Instagram at Fitbooks_AU. I'm pretty active on there. I have like a booking platform through like my link in bio where you can book a call with me or you can just message me to work with me. Like I'm pretty flexible with intake options, to be honest. Like just contact me, reach out and we'll set something up.
Yeah. Or if you want to access Jordan in our membership, she does a call once per month with us, and it's going to be all about advice with accounting, as well as just we're going to collect frequently asked questions and utilize them on the call. And if you do sign up with our membership, there is an option to add Jordan onto that as well to do like a full overview of your service too.
Yes.
So lots of different little options there.
Yeah, absolutely. Yeah. And then like any Forward Moves clients that work with me get a 20% discount on setup fees, and I set up your Xero for you and everything like that.
Highly
and then,
recommend.
Yeah, so we go one-on-one monthly from there.
Beautiful. Well, thank you so much for coming in today.
Thank you for having me. Thank you for popping my podcasting cherry.
You're so welcome. And thank you everyone for listening. We will see you in the next episode.
See ya.
Bye.